day. My name is Richard Wexler, and this is Caring in America, the podcast for caregivers and care recipients. So, folks, the ones that listen to me all the time, you know my story 20 years ago, working in the software industry when all of a sudden I had been married, was married later, two small kids, and all of a sudden all four parents get ill, and we start that adventure of taking care of them, which lasts for 14 years until the final parent passes at 96 in 2019. About 2 years ago, started the podcast, wanted to keep on educating, wanted to find a little easier way to do it as I was approaching 70 years of age. And now, with the launch of our nonprofit, A Plan to Age, I am the CEO of that venture as well. We have a special guest today. I'm about to introduce her via her bio. Etiosa is dedicated to helping people make smarter financial decisions. She partners with organizations to apply behavioral economic insights that drive better client and business outcomes. With experience across the USA, Australia, Africa, and the UK, she brings a global perspective to her work. She is the host of her First House podcast and the author of How to Talk to Your Parents About Money, a practical guide to navigating critical financial conversations. Are you there, ma'am?
I am Richard. Thank you for having me. I'm looking forward to this conversation.
You're very welcome. Let our audience know where you're sitting in the US for this conversation today.
Right now, I am in sunny Tampa, Florida, and it is a lovely day.
And no humidity? Is it warm and not humid today?
We're not quite yet into the depths of summer, so it is warm and not humid, but we have probably 2 more days of that before everything, scatters.
So I mean, there is a little bit of time in Florida when it's nice, but not humid.
hmm
Something that I've never quite gotten used to, and that's humidity. But let me start out. If you could tell our audience a little bit more about yourself, your background, and kind of what you're doing.
hmm So I am a behavioral economist, which means I pretty much specialize in how people make financial decisions, the psychology behind how we make those money decisions. I am the CEO of Decision Alpha, and that's a firm that really helps companies that are in their growth stage with pricing and monetization. But before that, I spent almost a decade helping banks and financial institutions build better tools for customers that improve financial well-being. So what I really care about at the heart of all of this is that every single one of us, everyday normal people, is able to live a better financial life by making better financial decisions. So that's what my career has been centered around. And recently I wrote this book, How to Talk to Your Parents About Money, because I saw that it was filling
Sure.
a much needed niche, a gap. And I thought it was worth exploring that and putting together a practical how to for people.
So we'll talk about that in a second. I'm kind of curious. I mean, from a behavioral standpoint, from a psychological standpoint, I don't know if we always think that decisions we're going to make about money, how a lot of that or part of that comes from a behavioral issue or a psychological issue. Could you talk a little more about that?
Absolutely. So it's interesting because both from a psychological perspective, a lot of the decisions that we make with regard to money, just in general, is impacted or are impacted by our biases, by our beliefs, by the way we're raised. They all kind of play a role in how we're making financial decisions. But then also outside of that, the context in which we're making decisions impacts a lot of the ways that we choose. And so, for example, when you receive money, money is fungible, right? A dollar is the same as every other dollar. But you will find that if you've got an account that's labeled for like your mortgage versus one that's labeled for like a holiday, you're going to treat those two accounts differently. You're not going to say these are the same dollars. You treat them differently based on what you had planned to use them for. That's called mental accounting and behavioral economics. And that's one way where the psychology is coming to play a role there, because we like to think about things in separate buckets. And once
Sure.
we've assigned something a role, we kind of want to stick to that role. It feels weird to use the vacation money to pay up the mortgage or vice versa. And so there's lots of neat insights like that that behavioral economists study that really help us then go, okay, if we know people think and act in these ways, how do we build tools and processes and systems that help them just work the way the brain is going to work naturally, make those decisions aligned to how the brain is already thinking, and
Sure.
get them to a better place.
I mean, something I don't think about all the time, but now that I'm sitting here thinking about it, I mean, a large purchase. I mean,
Mhm.
cars many, many years ago when I was young, I mean, they weren't that expensive. Now they're extremely expensive. You're going to buy a car, you're going to invest in your first home or a new home. I gotta believe there's a lot of psychology, I would think. If I'm wrong, please tell me, that goes into thinking about those type of purchases.
Absolutely. And so I imagine back in the day when you're buying a car, they're probably telling you this is the full price up front, right? This is going to be $5,000, $6,000. Now they talk about what is the monthly cost, right? Because they assume that you're going to finance it. And so even the way the
Interesting.
numbers are
Yeah.
presented, right? It's like 599, because when things end in that 99, we tend to think about them as cheaper and more utilitarian. We tend to round them down. And so you're leasing a really expensive car, but you're presenting the price to you as if it's a cheap
Wow.
utilitarian good. And that is something that has been well researched. They have put a lot of thought and effort into how they even show you the price and talk about it. So that's the psychology behind a lot of what you interact with as a consumer, just navigating these money decisions in the everyday world.
You're 100% right. I mean, I'm old enough, so cars were. I mean, I bought my first car for $600, and I
Ha!
sold it a year later for $500. But again, we were talking the full amount. And you're
Mm,
completely right. Whenever I see a commercial on TV these days to purchase a car, it's usually based on the monthly fee. Something I
mhm,
guess our brains can swallow compared to 50 or 60 or 70 or $80,000 for a
mhm,
car. You know, as we move on, one of the things that really interested me in wanting to talk to you and wanting to get you on the podcast, and we'll talk about how to talk to your parents about money. You know, for 20 years, I've lived senior care and lived dealing with adult children and parents, both personally and professionally. And probably one of the biggest areas that isn't discussed, sometimes I find it isn't discussed at all, obviously, is money. Can you
mm.
tell our audience what inspired you to write that?
Absolutely. I can tell you the exact moment where I got the idea, and then I'll also tell you a little bit about the actual impetus for that idea. So it was last year, I was in Boston Logan Airport in the winter. And it was very early, 6 a.m. or so. I was walking from the terminal across the jet bridge, going into the plane, and I'm standing in line. You know that line you have to like finally get on board after you've survived like 7,000 lines.
Yep,
And I
I
had
get
this
it.
flash, I had this flash of inspiration, how to talk to your parents about money. And I was like, huh. So I whip up my phone and I start just Googling, has anybody written about this? Is anybody talking about this in a systematic way? And there really wasn't what I had envisioned, which was a clear guide that said, start here, say this, do that, don't do this. Just a simple, practical how to. It didn't exist. Now, I know that the reason I got that idea was because prior to that, I had been talking to a lot of financial advisors. My previous role was in the financial investments world. So I have a lot of financial advisors who are friends, and they're saying to me, hey, I've got clients who come into my office. These are clients who are in the seven, eight figures net worth, and they are just uncomfortable talking to their children about money. We're
Sure.
trying to like get them to think through estate planning, and everyone is silent. There's awkwardness, like the blended. It was the whole thing. But also, in addition to that, I had friends who were coming of age and saying, my parents are going to be retiring soon. How do I have that conversation? How do I think about that? And
Yeah.
then finally, we are in the process of what's being called the Great Wealth Transfer. $73 trillion is expected to be transferred
Whoa.
across, exactly, across generations in the next 20 years. And that's a conservative estimate. And so what
Wow.
is happening exactly is what is happening is we have a lot of money being handed across the generations, and nobody is saying, here's how we made it, here's what we think we
Yeah.
need to do with it, here's what it means to like live your life well and to enjoy your retirement. This is what it looks like for us to come up with a financial plan that ensures your legacy is preserved, ensures you enjoy your later years, ensures that the whole family is on the same page with regards to the assets that you have.
Wow. I mean, again, and where my brain's going is the conversation we just had, the car conversation. So
Hmm.
back, I mean, I turned 72 this week. I'm not old, but I'm not,
Happy birthday.
thank you, I'm not young. But in my generation, when you go back that far, and I've talked about this a lot, mom probably didn't work. Dad worked. The last thing you did as a child was ask dad questions like, well, dad, how much do you make on your job? Well, dad, how much did the house cost when you bought it? Well,
Mm,
dad, how much is the mortgage? Well, dad, how much do you have in savings? I mean, we're in a different time now, but back then, any one of those questions you probably would have gotten slapped across the face. So I mean, it's so much different now. Let me ask you a question. What are some of the biggest fears or concerns that parents may have? Parents nowadays in
mm.
2025 may be different back then, maybe the same, in discussing their financial situation with their children.
I think part of it goes back to what we were talking about earlier. Money is, for better or for worse, tied so intricately to our sense of self, to our identities, that sometimes discussing it can feel like we are opening ourselves up to be evaluated. Like a parent discussing their financial decisions might feel like they're opening up the choices they've made across their lives to be evaluated or picked apart by their children, when that's not the case. I always tell people money is like a hammer, right? You can't be good or bad with a hammer. It's just a tool to help you live the life you want to live. So
Yeah,
you can't be good or bad with money, but people tend to tie their financial decisions to their self-worth and their identity, and that can be a stumbling block to having these conversations. First of all, there's a fear of judgment. The second thing is a lot of parents, even if you are, you're 72, you're 82, you're 92, a lot of parents still feel like parents. And so they want to protect their children. They don't want to stress them out with unnecessary financial worries. And so there can sometimes be a fear of involving the children and having them have to deal with one more thing, especially if they're at an age, if your parents are retirement age, they're watching their adult children navigate, careers and building their own families and buying
sure.
houses. And so you're looking at your child doing a lot in their life, and you're thinking to yourself, do I want to add one more thing to their plate sometimes? And I think there's also just that loss of control tied to it, right? There's sometimes the
Yeah,
fear that starting those financial discussions might actually lead to losing independence. For 70, 80 years, you have led your life a specific way. You've bought what you wanted to buy, you've lived how you wanted to live. And now you're opening up those choices to other adults to have a conversation about. And that also can have some fear tied to it.
yeah. No, I mean, folks, this is fantastic information. As I say on almost every episode, please share this with your friends and colleagues. I mean, this is so interesting, really understanding this. I've talked to a lot of adult children. I've talked to a lot of parents over the years, and I don't have your background, but trying to get parents to understand at some point that, especially parents that are in my generation or even older, maybe they're in their 80s, maybe they're in their 90s, maybe they have grandchildren, but that conversation has to take place. If they need care, and I tell people about 95% of us will. I mean, it's a reality. It could be a couple hours, it could be years. Usually it's something in between, but the family needs to understand what mom and dad, what grandma and grandpa have in the piggy bank, etc., and understanding that those walls have to come down. I mean, I've heard stories over the years of, we'll call him Mr. Smith, didn't like banks and literally would put money in his walls. I've talked about this a lot. And so, what are you as the adult child going to do? You're going to go sit there and knock down every piece of sheetrock in the house looking for that money? I mean, folks, at some point, and I get the psychological barriers and I understand, I'm trying to understand all that, but these conversations really need to take place. And we talk about the family conversation with a plan to age. Part of that is the financial piece. So let me ask you, are there some do's and don'ts for starting this conversation with mom and dad, with grandparents, etc.?
Absolutely, there are. And let me start with the don'ts. And this is a don't for adult children, don't approach the conversation expecting that you are going to be the expert in the room.
Yep.
Right. Sometimes adult children are hesitant to have this conversation because they feel like they need to know everything about IRAs and rollovers and long term health care and annuities. And you don't need to know all of that to start with. Just you don't have to be the expert going into the conversation. So don't feel like you need to go in and start giving mandates, right? The conversation is not for you to tell your parents what to do. It is to focus on collaboration and having that joint communication instead. So that's the first don't. Like, kind of the mindset has to be we're cooperating and we're trying to get to a plan together, not I'm going to tell them what to do. And if you start early enough, that cooperation and that cooperative mindset really helps ease some of those conversations. In terms of what you should do, the first thing I tell people is because we tend to have a lot of these money biases, these scripts, these beliefs that we bring to the table about money, it's really helpful to start by just preparing yourself, right? Prepare yourself to like reflect on whatever biases you might be bringing to the table. For example, I tend to be a saver. I'm very conservative when it comes to money. I save a lot. I think that's the right way to go. But if I was having a conversation with a parent who tended to be of the belief of, if you have it, enjoy it, save a little bit, but also leave a little bit, I will cannot go into that conversation wagging my finger at them and saying you should save more. That's my bias. It's not necessarily the right thing for them. So, spending time just preparing yourself, reflect on your biases. In the book, there are questions that help guide you through some things to think through and have at the back of your mind before you start that conversation. Also, prepare to listen actively. And listening actively is not that you're watching their mouths move while you think about what you want to say next in your head. Actually listen to them, and ask curious questions. What does your plan for retirement looks like? What are you excited about to do when you retire? What are the decisions you're most proud of across your life? You're curious, you're listening actively. And then finally, you want to set realistic expectations for the conversation. Right. What that means is we're not going to have one conversation and like hash this out and never have to talk about it ever again. You're going to have small, tiny conversations over time that kind of then build up to this larger sense of, okay, now we're on the same page. So, kind of set realistic expectations that these conversations can be hard, they can be awkward. You don't have to do it in one big bite.
And folks, this is so important. I mean, I talk about that four-letter word care all the time, and it's four-letter word comrade cost. I mean, it's real. And unless a family is going to jump in if they live hundreds of miles away or states away and go take care of mom or dad or grandparents, whatever the case may be, or even take care of a spouse, we as the adult children, it's a big we, adult children need to really understand by having this kind of conversation, or as we talked about, multiple conversations, to really understand what position are mom and dad in. Do they have 100,000, 500,000, 2 million, 3 million in their piggy bank? Or is their life, and you as an adult child may get some of this understanding, has their life been more challenging? A lot of health issues. Maybe there were some other things within your lifetime that may have cost the parents money, and maybe there isn't a lot put away. But before you get that call that mom's in the ER, she's broken something, maybe it's a hip, really understanding through fantastic conversations like this, okay, where are they? What does their financial situation look like? Are they, maybe with us helping them, going to be able to afford care? Do they want to stay in the home? Do they want to move someplace? But a lot of it, I was about to say all of it, a lot of it revolves around this issue of money. So how can adult children ensure that conversations remain supportive rather than, making judgments or telling mom and dad what to do?
Mm. That's a really good question, and that's a good point you made too. The at the heart of all of this is understanding where mom and dad in terms of their assets and in terms and what how does that relate to the kind of life they want to live in their latter years. In terms of having conversations that are supportive rather than judgmental, I stated earlier, you want to ask curiosity driven questions. How did you think about money when we were little? It's also helpful to actually start the conversations from an I perspective. An I meaning you start by saying, you know, I've been thinking about money or I've been doing this with my money. You want to start with your vulnerability
Right.
and then invite your parents into the conversation. So it's not you, kind of interrogating them. There's actually a fair exchange outside of the actual conversation, and of course, there's scripts in the book to guide you through this, but outside of the actual conversation, choosing the right time and place is important, right? You want to find kind of low pressure, private settings. This is probably not the conversation you want to have when everyone has come back from a trip and we're all tired or, out at a busy brunch restaurant. This is not that's not the right time to introduce the
Sure.
conversation. So time and place is important. The way you start the conversation with those I questions, asking those open-ended curiosity driven questions. And then also be aware of tone and body language, right? If you're talking to your parent and you start to see like the arms are folded, they're getting more into that defensive posture, they're pulling away physically from the
Yep.
conversation,
Yep.
it is absolutely okay to say, let's put a pin in it. Let's come back to this later. It's okay to change the subject, ask about something they care about, something more lightweight, and you can bring the money subject up later down the road. That's why we say you don't have to solve everything in one conversation. So watch for body language as well.
And I think, I mean, more and more I'm thinking about this, folks that are my age, folks that are older than I've, folks that may be in their 90s. And I mean, I'm talking about the generation I came from at 72. It was probably even a little tougher if you're 82 or 92 through the depression and all of that. And now they never had these conversations because they couldn't. They would get that hand to their face. And literally that would happen back then, and they've gone all through life with the idea that we don't talk to our children about these issues. Money is the conversation for mom and dad, not with children. But you're bringing some fantastic information, folks. Again, please listen, please spread this on. As we get ready to wrap up, people want to get a copy of your book, where can they find it? If people want to reach out to you, do you want to give an email? Do you want to give a website, a phone number? How can they get in touch with you?
Absolutely. So you can find the book on Amazon, both a physical copy and then a digital copy on Amazon. It's called How to Talk to Your Parents About Money. And you can reach out to me. I love talking to people about all of these kinds of decisions, conversations. You can reach out to me through my website. It's etiosa.com. That's etinosaa.com.
Awesome. I mean, this has been a fantastic conversation. It fits so well into what we're doing in our family conversation. As I said, so much of a part of that is the financial conversation because, folks, I mean, you're sitting down listening to this, you're in the car, wherever you are. This is reality. And I've been yelling about this for 20 years. This care thing is reality. And I don't know, maybe in 20 years from now, hopefully I'm still here, but maybe this changes and it isn't about money. But right now, to be able to get your loving parents, get your loving grandparents the appropriate care, it costs money. And you need to understand, again, what mom and dad have done, what grandparents have done. Has it been easy? Has it been rough? What's their piggy bank look like? It's an extremely important conversation. So, Etios, I thank you. I thank you for your time today.
Thank you for having me, Richard. I really enjoyed the conversation.
You're very welcome. And as I always say, folks, until we meet again, have yourself an awesome day.